Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Monday, February 27th. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, a couple clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late-day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, BOIL. Started watching this one a couple days ago, and this thing just continues to grind higher and higher, putting in those higher lows and higher highs. And from a trend building perspective, that is truly the name of the game. And we have that once again here. But the big dynamic that occurred today, and this will mean a bit more to those that have, even a basic understanding of charts, is that I'm sure you've heard of that 200 period moving average, which on my chart's denoted by that pink line. And you know that when the price is down below there, it does tend to act as resistance. And you can see that earlier on in the day, it was indeed acting as resistance. However, by the time the afternoon came around, you can see the price has gotten the break up through it and has now continued to grind higher and higher up through there. So that in and of itself is a great sign of bullish power moving into next week. Now, of course, that doesn't mean that it will continue to go up because there are no guarantees. But is it plausible? Is it valid for you to think that there's a likelihood that it will continue up? Yeah, absolutely, based on the the nature of that breakout right there and the fact that this breakout was occurring on good, solid, respectable volume down there. So overall, that level has now been completed in terms of overcoming it from a resistance standpoint. As far as next potential areas of resistance are concerned, next key level now going to be right up there around $6.15. So that'll be the next key battleground to watch going into next week. As far as supports are concerned, kind of a couple different ways you can look at this. The very near-term level of support is going to be that pink line there, but the overarching level of support will be that purple line down there, the 50-period moving average, which will continue to slope up and make its way higher and higher. So that's really just a question of personal preference if you like to play more so near-term ones or overall levels, but those will nonetheless be the key levels of support. But overall, higher highs and higher lows is exactly what this one's been doing the entire back half of the week. Next one here, TRKA, and a very nice move today. And overall, the level that I talked about a while ago, in fact, I'll just get rid of that level to do a little house cleaning there. But the key level that like I said, talked about earlier was all about that 32-cent mark there being a key level of resistance. And yes, the price did get rejected back down, but that's where today is interesting because now the price has made the nice move up. And while it didn't break through 32 cents is certainly well within striking distance now. So it becomes one of those areas where it's more than valid to throw out the question of, okay, is 32 cents going to be broken? Case in point, when the price was down there, did it really make much sense at all to be asking that question? I mean, not really, because the price wasn't anywhere close to it. But now that the price has gotten back up within the range, this question becomes much more valid. So if you're some sort of breakout player, then I definitely keep an eye on 32 cents because you got to think a lot of people are watching it, which introduces in the whole talking point of self-fulfilling prophecies, where if a bunch of people are watching the same level, wondering the same thing, that very well could lead to, upside buying pressure. So keep an eye on 32 cents. And then just from a good old, pattern perspective angle, and I'm going to draw this very crudely here, put the golf ball down there to make it a little bit more visible for you, or visual, I should say, for you golfers out there, but a nice little bull pennant pattern. So however you want to look at this, there's a lot of good things going on. Good volume today, nice movement. Got the bull pennant, and now the bull pennant is right below the key breakout area of 32 cents. So if you like penny stocks, I definitely keep an eye on it. Next one, TMBR, and overall, good solid move from the big picture point of view when you consider that just yesterday the price was all the way down here. Now, there's a bit of perspective that goes into it. Meaning, if you're some sort of day trader, flipper, scalper, whatever you want to call yourself, and you bought right there, or you bought right there, then sure, and your game plan was to buy and sell within, 7 minutes. Well, then yeah, from that angle, the chart looks bad as there was a big pullback here. So there is no doubt about it. You can't deny the fact that there has been a downwards channel that has formed. However, if you are somebody that cares about the big picture point of view, well, part of caring about the big picture is you got to ask the question, well, okay, fair enough. There is a downwards channel right now, but what was happening before the downwards channel? And what happened before that was this big old move in the upwards direction. And when you factor that in, all you now have is a bull flag pattern. Now, just because it's bullish does not mean that for sure the price is going to turn back upwards, but would it be completely shocking to see the price, stabilize out and then make some sort of turn back to the upside? No, I don't think that's far-fetched at all. I don't think that's unreasonable. Again, that's not the same as guaranteed, but it's something where I can actually see that where you would be thinking, and that still does make sense. So if you like bull flag patterns, if you like stocks down below $5, then keep an eye on it. Next one, BAER, and I really like this one. Well, I guess not. This isn't the only reason, but the level or the main reason is you got to think that a ton of people have just noticed. Maybe it stuck out to you right away that $9.50 has very clearly been a problem point. Twice, late afternoon, Price came up there and tried to get through it, couldn't quite do it. But it's also not like the price got rejected and then just collapsed all the way back down. No, which brings about another very interesting level, and that's just the fact that, yeah, sure, it got rejected, but you can see right here very clearly the $7.15 mark. 3 times right there got tested, almost got tested right there during this last 30 minutes, and it held strong. So it does make it more than valid to think, okay, yeah, big move up, yeah, big pullback, but you know what? It's starting to go sideways. So maybe, just maybe, this pullback is over, and maybe, just maybe, this thing is getting ready to turn itself around and then make another nice big move up through that level. Again, not guaranteed, but is there at least some reasoning? Is there at least some plausibility behind that thought process? Absolutely. Case in point, let's just say that the price was just continuing to drop and drop and drop and drop, and I'm sitting here saying, hey, it's looking like this pullback might be over. You would be completely justified to say, what are you talking about? The price is literally still just going down, but that's not the case, right? The price is going sideways, so it makes sense to question, okay, is this consolidation the end of the pullback, and will this thing turn itself back around? Let's see what happens with it on Monday. Next one here, AMC. I'm not going to spend a lot of time on this just because if you've watched past videos, then you've heard me talk about it. And quite frankly, there's nothing really to talk about other than the perspective of people that maybe, were those day traders, scalpers that were buying right there. And then, they got the big pullback here. But from the grand scheme of it all, everything is still perfectly fine. The price has held above that green line right there. I mean, in all actuality, if you want to look at, big picture patterns, I mean, if anything, there's a bull pennant pattern sitting right in there. So again, depending on your viewpoint as day traders that, were maybe buying right there or right there, I understand that the chart can completely feel terrible and, maybe you should already have been stopped out per your rules. I don't know. But all I'm getting at is that from the bigger picture point of view, everything is still perfectly fine. Now, had the price come down here and blasted down through that area of support, then okay, that starts to become a different conversation, but that didn't happen. So overall, like I said, if you were to say summarize it in a big picture point of view, I would just say bull pennant pattern. Real quickly, wanted to pause and personally invite you to get signed up for this free live online training next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency to manage risk, then certainly get signed up for the free live training. If you're watching on YouTube, there's a link in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then certainly get signed up for the free class. Next one, WISH. Brutal day, but the reason this one's interesting is because I'm not going to call it a hugely popular stock, but it's a lot of people have heard it because a lot of people remember when it was making crazy moves, several months ago. And so you take a relatively popular stock and then you just combine it with the fact that this thing got absolutely destroyed today. It makes you just kind of wonder, okay, is this some sort of slowing down of the momentum? Case in point, right here, there is no slowing down of the momentum. I mean, it was just quite literally straight down. So sure, it's still drifting downwards a little bit. I mean, you can't deny that, but hopefully you can see the difference between this downwards movement compared to that downwards movement. So that at least makes it reasonable to throw out the question, okay, maybe this downwards momentum is stopping. Maybe there can be some sort of move in the upwards direction. And yes, you can completely say, Clay, is this kind of catch a falling knife? I would not refute that argument at all. But my point here is that given the sideways nature and the slowing down of the momentum, you can at least start to structure risk-reward trade plans where, assuming, of course, you're going to be disciplined and honor stops, where relative to what's being risked, even if you get a modest bounce, even if it just comes up and does something like that, again, compared to what was being risked in the first place, you could be looking at a very solid opportunity to structure a risk-reward scenario. So if you like penny stocks, if you like to play these where you have those small little risks, those tight little risks, then I definitely keep an eye on it. Next one here, TSLA Tesla. And overall, I had a green line in here from yesterday, but I just got that out of the way just because try to save a little time here. But point being that I think there's two main levels that so many people will be watching because they just really stand out like sore thumbs. And that is this initial level right here at 192 as support. You can see that the price bounced off there previously, and then even this morning, price didn't hit it exactly, but certainly got close. So you have that 192 mark that you got to think a lot of people will be watching, myself included, as somebody that watches Tesla on a daily basis. And then you just have this overarching trend line, which yesterday didn't hit it exactly, but I mean, it got respectably close to it. And then you can see with the gap down today. But point here being is you got to think that a lot of people are going to be watching that trend line, along with probably these moving averages too. I'm not going to deny that. But just from a very simplistic point of view, in terms of sometimes that's what trading's all about. Just the KISS method. Keep it simple, stupid. So from the KISS method, main area of support that I think matters most and that most will be watching is 192. Main area of resistance that you got to think a lot of people are watching is that trend line up there. So keep an eye on these couple dynamics here. But for those people in the very near term, and what I'm curious about is there is this bear pennant pattern that has formed. So in my opinion, at least, I don't think I'd be shocked at all, or I know I would not be shocked at all if the price did come down there and at least test 192, which would just simply be a bearish breakdown of that pattern. Now, what happens at 192, that's where things get a little bit, more unclear. But like I said, in the very near term, I'm certainly watching that bear pennant. Next one here, NIO, and I probably should have put this by WISH because same general idea here, but NIO is way more so a popular stock compared to WISH. But that's the first, kind of part of this setup here is that NIO, very, very well-known stock for sure. And next part of that is this has been an absolute beat down the past couple of days. I mean, when you stop and think about it, that Thursday morning, the price opened up there with the gap up, and now Friday, all the way down there. I mean, that is just a very, very massive beatdown. But like WISH, Wish, there has been some symbolizing that, okay, maybe this downwards momentum is moving and nothing fancy because, well, the price has at least started to go sideways. As I've said, sideways action does not guarantee a bottom. It just makes it more plausible to start to throw out those questions. So same general idea. If you can be disciplined and if you're going to honor stop losses, then you can certainly structure yourself some nice little risk-reward scenarios. A key level of support there you can see where the price has been down there several times at $9.15. If there is any sort of bigger bounce to the upside, then that first key dynamic to keep an eye on from a resistance standpoint up there at $9.60 with that potential little gap close right there. But like I said, popular stock, massively beat down, starting to go sideways. So maybe this is finally some sort of bottom before, even if it's a dead cat bounce. But from a risk reward scenario, that could be all you need to structure yourself a very nice trade plan. Next one, LUNR, one of those that's been absolutely bonkers. And I hesitate. Should I even talk about this one? Because, these ones can really get you in trouble if you're not disciplined. But I am going to treat you like a responsible individual and say, if you're going to play these ones, you better be a disciplined trader. You better have risk management protocols in place. Because they can make you a lot of money for sure, but they can also destroy you. Just ask the people that were buying up there and then got stubborn as the price came all the way down there. Those people, accounts are gone now. But like I said, that's where this thing also comes from because no doubt about it, clearly this thing has gotten absolutely beat down. But notice where the price has at least started to go sideways. What a coincidence right there at that pink line, which you now know is, on my chart at least, the 200 period moving average. So found some support right there. And then this afternoon, all day long, just hovering right above that area, which makes it plausible to throw out the question, okay, is this some sort of bottom? Is this nasty pullback over? And it's not like the price has got to, bounce all the way back up here to have a quality trade plan. Even if it just goes up there and tests that 200 period moving average, from a risk reward scenario, you could structure yourself a very worthwhile plan. So like I said, if this fits in your risk tolerance parameters, you do have a very interesting situation here where the price, like I said, has been absolutely beat down and then coincidentally found some support right at that 200 period moving average. So, it could very well, make sense to structure some trade plans around there if you're going to be disciplined. Next one, TQQQ, which is an ETF that measures the NASDAQ. So if you're somebody that thinks that the NASDAQ market is going to rise, well, then this one will also rise. The difference here is that this one gives you access at a much lower price point. And with the NASDAQ having rough days, this one also had a rough day. And where the first update needs to come into play, and for those of you that watch past videos, talked about that 2205 mark being a level of support. But with the price breaking down below it, it would be considered an area of resistance. You can see this played out perfectly. You can throw this into a textbook. Quite literally, price gap down. So at that point, it become resistance, bounced up during that first 30 minutes, and surprise, got rejected right at that level. So don't get me wrong. I'm not saying that level cannot be broken. I'm just saying it makes sense why that 22-ish dollar mark was the problem, and that moving forward, if the price does bounce, 22 will be that key level. And I'm also going to extend this out because I think this will play some roles in the future. When or where, not exactly sure, but like I said, out of my curiosity's sake, I want to keep that trend line in place there. But you also have to keep in mind that before you even focus on that trend line, prices also first then got to break up through that purple line right there. As far as areas of support, nothing fancy or complicated. Quite literally just a question of, okay, where did the bleeding finally stop today? And that was down there at 21.35. In fact, several occasions, once, twice, basically 3 times the price got down around that area. And to give credit where credit's due, the bulls did hold strong, so that's encouraging that it didn't spin too far out of control. But yeah, anyway, look at it. Rough day today, but next week, if this is some sort of bottoming where you can get a bounce in the upwards direction, then you could be looking at some nice solid upwards momentum. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the free class next week. It'll be Thursday, March 2nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, do two things for me. Can you tell it's Friday? I need the weekend. Do two things for me. Hit that like button. Leave a comment below. Say hi. Tell me what you traded today. Tell me what you're watching next week. Those two things help out the channel a lot, and I really do appreciate it. So get signed up for that class. Hit that like button. Leave a simple comment. Have a great weekend.